So, a very good morning. If you're just joining us, obviously it's 6 o'clock, just gone 6 o'clock in the morning here in London, and it almost feels like I've sat in a time machine and it is June 24th and I'm about to give the same rundown I did for Brexit, or at least certainly that's how I feel after working through the night with the traders here. Almost a bit the wind knocked out of our sails, so to speak. We came in pretty G'd up, looking forward to the night. We had the initial volatility that kind of came with some of the key timings of the early swing states, which we of course were expecting as per the plan, such as Florida. You had the various, I'd say, counties of the state reporting. It was erring to Clinton, then to Trump, and it was toing and froing. But we were fairly comfortable at the fact that at that point there were still quite a few key areas, namely the southeastern part of the state of Florida still to come in, which are typically very democratic leaning and of a larger populace of that particular area that was going to tip it over the line. But Florida took a while, as has been the case in the previous election in 2012, and so we had to wait for that. And then in the interim period we started to get the other swing states coming in, and then the pattern really started to emerge of these are extremely close. And what started off was quite upbeat for Clinton and a fairly optimistic note in the markets was quickly reversed. And then as we awaited Florida, you were getting the percentage increment increases of the how far they were through counting all of the votes up, and it just started at the end to lean further towards Trump, and that coincided with two other very, very key swing states, that being Ohio and also North Carolina, going the way of the Republican candidate as well. And then as it unfolded, you can see here the market didn't hang around in terms of pricing in what we thought the asset price movement would be, and that was risk off trade the more that Trump was gaining an advantage. So you can see from the charts here, I've got up the S&P in the middle right. Don't be fooled by the kind of that's a small move. This is a 5% move. The line I've got drawn up here at 28.5 actually defines the 5% drop, which marks the limit down cut for overnight trade on the CME in the futures market. And so we've kind of hit that boundary, been stopped out and halted in trade a couple times, and we've just seen a slight bounce more recently. Likewise, risk off trade meant that treasuries shot higher. Gold, top right, you can see here, exploded to the upside. I mean, we were trading really around what was technically S1 down at 1269. We've rallied all the way up to just short of 1340 at the high in gold. Likewise, the other sentiment-driven asset has been the Japanese yen. So yen's strength on the back of the flight to quality bid, and dollar yen plummeted from around above 105 down to test 101 before reversing more recently. Just taking a look though at where we stand at the moment in terms of the actual map of the US here, you can see much more red on the screen geographically than we thought we'd be looking at this time in the morning. Looking at the breakdown, as I say, we've just gone through 6 a.m. in London, so there's still actually it's not formally been announced yet that Trump will win, but given the vote count stands at 255 compared to 215 for the Democrats, and the fact that you still got Michigan to come in, for example, one of the remaining swing states, and that is leaning still heavily in favor of Trump. You can see here 86% of the count is done, and it's leaning 48.3% to 46.5%. You've also got Pennsylvania coming in as well, leaning Trump. So this is pretty much a home run now in terms of putting him safely over the line. Actually, what you're starting to see, though, when I start looking back at the charts, is quite an interesting move, because we're starting to see the dollar seeing actually a bit of strength as Europe has come into market. And now this looks eerily familiar to what we had with Brexit. Because I remember with Brexit, obviously we had the bulk of the negative move, i.e. downside in the pound, overnight. That came in various waves, whether it was triggered by Sunderland or Swansea later on, or the poor turnout in London. But then actually when UK and Europe came to market, we started going bid in the sterling currency. It was almost if the move was a bit hyperextended or oversold, and people started buying back the pound, and actually it bounced back a couple of percentage points, which was a pretty decent move. Before then, obviously the prevailing long-term trend has been more negative for pound. And then what you're seeing here actually I think is quite similar. Actually, after the dollar's been pretty hammered overnight, as Europe has come in now, don't forget Central European time, we've gone through 7 in the morning, and UK participants will be in early, so they would have started to come in now and started just picking up the dollar a little bit. So maybe just a slight bit of movement off the highs in both major pairs here in Eurodollar and cable. Likewise, the kind of lower bound of the circuit breaker or the limit down in the futures trade in the S&P has defined that low point. So also a little bit of a lift off the most depressed levels. And then likewise, treasury markets have also edged a decent amount from the highest point where we tested and found some resistance around the 131 handle on the upside. Why this might be occurring, I guess it's a couple of things. It could just be a bit of profit taking on the various moves. The other thing you could argue is that in terms of the Fed hike probability for December, that has now moved below 50% in terms of what's measured by the short end of the fixed income curve. And obviously pre this election we were pricing in as much as 75-80% probability. The market's been very priced in for rates to go up in December, and that has obviously been the hawkish communication that's been signalled by the Federal Reserve. However, given the impending volatility that's likely to occur and the negative ramifications, at least in the short term, of a Trump presidency and what's looking more like a clean sweep scenario, which was probably the lowest probability, means that actually this might shackle the hands of the Fed in order to action that commitment to a hike in December. If that happens, you know what happens to equities when the Fed don't hike rates. A longer period of lower, more accommodative monetary policy generally starts to lift equity prices. And so maybe there's a bit of that play as well that might come in. But ultimately, I think that the way these markets might move might very well replicate what we had with Brexit. We've had the big move overnight. We might see a bit of a recovery as Europe come in, but the prevailing theme, possibly for the rest of today and also the days thereafter, would be negative thereon. I.e., as the overall is the market needs to, I guess from an emotional standpoint, gather itself in the fact that, again, for the second time politically in these big kind of democratic votes, it's gone against what the market was expecting. Although these moves that we've seen across assets, I think, have been a little bit more contained. Likelihood this is because the market was a little bit better priced, or its expectation was that potentially the what if scenario was given a bit more credibility and the market was not so complacent this time round. And that's probably negated some of the size of the market move compared to the 11% depreciation we saw on that one night in terms of Brexit and the sterling currency. So I guess, where do we go from here? Let's see how Europe takes it when we come in. We've seen already, as I say, a little bit of a relief in some of the initial profit taking as the extension of some of these moves. The interesting thing will be obviously in the S&P. You've got the limit down at 20.285 in the S&P future, which has negated any further downside thus far. But obviously the price limit guide on the CME, if I just share that with you, when we get underway in floor trade later on the NYSE and so forth, obviously these price limits reset and we start to have bigger increments, i.e. 7, 13 and 20% price limits. So certainly there could be more downside to come later. And then also we're still looking out, of course, for the actual finite confirmation of Trump being named the president. But that, by all means, as I say, is a formality. Just in terms of a couple of questions that I have is like, what will be the next big theme then to be in the market? I certainly think the Fed hike for the time being, I would say, is kind of taken a back seat. An interesting thing is if the Fed delay hiking rates in December, it brings about the question, when do they hike? And if you think that the next summary of economic projections is 4 times a year, so will be March time, that's also going to coincide exactly with triggering of Article 50 in the UK. And also we've got to navigate the Italian referendum in the interim period. And so there's a lot of reasons out there now for the Fed not to hike, I would say. The longer that time frame is pulled out, the more obviously the political side in the UK will start to come into play with that negotiation of their Brexit terms. So I would say for the rest of the session, for the rest of this week, for the rest of the next forthcoming weeks, I would say this US political situation will still be probably the most predominant force driving the financial markets. Going to leave it at that. That's your kind of briefing of how the night's unfolded. And to get you up to speed, obviously I'm still going to be here for a number of hours yet for the rest of you guys to start filtering in who haven't stayed overnight. But Trump presidency, it's just a formality now for the numbers to come in. And a clean sweep for the Republicans, so the most lowest probability event has occurred in a similar Brexit-esque fashion. And that's the state of play. I'm as much in shock as you are. Probably you can tell by my face. But we have to just roll with the punches and let's see how the rest of the day plans out.